Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the MarketSite, we have Josh Hochberg. He's the Deputy General Manager of Edelman Financial Communications and Capital Markets. He's here to discuss the Edelman Trust Barometer and how institutions are approaching ESG risk and a number of other items impacting their investment decisions. Josh, thank you so much for joining us.
Thanks for having me.
MarketSite today. Welcome. Tell us about the Edelman Trust Barometer and the sample set.
Sure. So it's a really interesting survey that looks at a population's trust of the government, of business, of the media, and other entities. We've been doing this for about 18 years. The survey that occurred in January of 2018 surveyed 33,000 respondents, so it's a good representative set. We wanted to take that concept of trust and bring it to the institutional investor community. We wanted to better understand how trust affects the investment decision-making process. So this year, this is our second year of doing this specifically for institutional investors. We surveyed 500 institutional investors, about $4.5 trillion worth of assets under management. We had 500 respondents, 100 here in the US, 400 in other major capital markets. And what we found is pretty interesting. The fundamental analysis of companies is still very much intact, looking at growth, looking at the financial stability of a company, looking at the quality of the management team. But what we also found in the survey is that elements like environmental, social, and governance issues are becoming more important. Company culture is becoming more important. So it was a really interesting survey that brought about a lot of different new learnings about the investment decision-making process.
All right, we're going to dive more into those items, but how positive are institutional investors in today's capital markets?
So it's interesting. There's a tremendous amount of volatility, as everybody knows right now. The market's down 500 points, up 500 points. We're entering bear market territory prior to the holidays. We're up large today. What's interesting is that our survey found that volatility is likely going to hold for a little while longer. 82% of respondents are positive about the market now looking back at the last 12 months. That drops down about 5 percentage points if you're looking out at the next 12 months. 40% believe that we're going to go into bear market territory in the next year, and 70% believe we're going to go into bear market territory in the next 2 years. Now, our survey was done in September, October of last year, so likely that's changed, maybe a little bit now, and maybe people are a little bit more bearish, but that's what our findings uncovered.
All right, now how is politics impacting investing style? Because especially over the last 2 years, it certainly has to weigh on investor psyche.
Sure, and it is. And politics has always been a part of the investment decision-making process, probably more now than it ever has been. Our survey found that 87% of respondents are changing the way that they're approaching their investments relative to the current political environment. 90% are looking at trade risks. So you look at the 87%, you wonder who are the 13% that are not changing their investment thesis policies, but that's probably a different conversation. What's really interesting is that a lot of the political issues that are at play are not being accounted for by companies, right? A lot of our respondents don't believe that companies are well prepared for political issues. So this is probably about better communicating how companies are dealing with tariff issues, how they're dealing with the volatile political environment, and communicating that better to the market.
All right, now ESG, you had touched upon that before. Go into that in a little bit more detail, and why are institutional investors really turned on to this concept?
So everybody's talking about ESG. We've been talking about governance, the G part of the ESG, for quite a while. Issues like the makeup of a board, shareholder-friendly concepts that are good, things that are good for shareholders versus good for the company. What we're finding now is that E and the S is as important. The environmental and social is as important as governance. So 90% of our respondents have changed their voting and engagement policy to be more attentive to ESG risk. And so, that's an interesting concept to show that they're very attentive to these kinds of things. And like I said, what we found in our survey is that the E and the S are as important as the G, and that's that's something that we've never uncovered before.
No, I thought this was an interesting data point that investors expect public companies to address social and economic issues that are out there, and that can go back to the political climate and again how
Absolutely.
invested folks are into ESG. Why do you think that is, that they're looking at public companies to fix issues?
So if you look at the Edelman Trust Barometer from 2018, the broad population trust barometer, it found that 64% believe that CEOs of companies should be taking a stand on societal issues. Right? That's starting to transition and make its way into the investment community narrative. So we found that 98% of investors believe that companies are urgently obligated to take a stand on societal issues. Those are things like the environment, like immigration, like income equality, and those kinds of issues. So when you're telling your company's story, you have to have a narrative, you have to have a communication strategy around those societal issues. Investors are expecting it, consumers are expecting it.
All right, now digitization, what exactly is that and how is that impacting the investing process?
So we've been talking a lot about digitization in terms of investors, how they're using quantitative analysis, how we're shifting to things like artificial intelligence and machine learning to help us make investment decisions. This is a little bit different. These are fundamental investors and how they're expecting companies to use digital assets to help tell their story. So almost all investors in our survey, in our US survey, go to digital channels like Facebook, like LinkedIn, like Twitter, to be more informed about their investment decisions. So this is about not just putting out press releases or having some commentary in a business publication. This is about telling your story and having a personality via digital channels such as LinkedIn. So what is the CEO saying about the market, about the company, about trends in the industry on his or her LinkedIn page?
All right, now let's wrap it up here. The Trust Barometer suggests that investors care about long-termism and outlook. Long-termism is a key priority here for us at Nasdaq as well. What is the key driver when institutional investors make their decision on what they're going to allocate resources to?
So this has been a point of conflict and argument for quite a while, this long-termism versus short-termism. The president even raised last year the concept of moving away from the quarterly earnings cycle. Certainly Larry Fink, when he's sending out his letter to CEOs, is talking about making sure companies are having a long-term concept in place and are communicating that long-term strategy. Investors, though, don't have a lot of time in front of management. So that quarterly earnings moment is still very, very important to them. However, they want to hear from companies what the long-term strategy is, what they're doing to get there, and the incremental results on a quarterly basis that's getting them to the point that they're going to deliver value for shareholders. So it's really a balance between long-term strategy and short-term results and incremental results that ladder up to that long-term strategy.
They just want trust in the companies that they're investing in.
That's right, long-term trust.
All right, thank you so much, Josh, for sharing that insight.
Appreciate it.
And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.